All right, so we've had some great, quote, great, unquote, economic news today. Stocks are blowing it up in a good way. I mean, blowing up, like taking off like a rocket. You know what else is taking off like a rocket too? Bonds. Does that make any sense at all? Stocks are taking off like a rocket. We had inflation numbers that came out yesterday or 2 days ago, with inflation data was pretty significant. And bonds are taking off like a rocket, where the yields on the 10-year Treasury, for instance, is down 6% today. Today. The yield is down 6%. What's the comparative in terms of the price of bonds? I don't know, but let's just assume it's up 6. I don't know. So the yield on the 10-year Treasury is back below 1.6 at 1.58, or maybe 1.56, I think, as we see here right now, which is at 3:12 Eastern Time on April 15th. Does that make any flipping sense? So inflationary data was quite high, was higher than expected. All right. Stocks are tearing it up. Economic growth activity was high. All that would lead one to think that the Fed would be raising rates. And when the Fed raises rates, what happens to the bonds you already own? Well, they drop in value. So the Fed is raising rates. What is not a good product to have? Well, of course, it'd be stocks. I mean, bonds. Those bonds would not be a good product to have. Now, again, don't fight the Fed. So you can say we're not going to buy stocks either. Okay, but stocks are still, at the end of the day, separate for mostly than the Fed interest rates, for the most part. Bonds a direct hit when they raise. There's no getting around that. Bonds take a direct hit. Stocks maybe not. There's some validity to say don't fight the Fed, but at the end of the day, if the economic outlook is huge, inflation is bigger than anticipated, all that implies that at some point in the near future the Fed will be raising, and when that happens the bonds will get smoked, and yet the bonds are actually going up in value and the yields are dropping significantly. Yeah. What? Huh? You're going to tell me that that's rational? Or that makes sense? There's economic sense behind this? No economic sense. So either the data says the market's, so remember, the reason the bonds are dropping in price, dropping in yields because they're going up in price, the reason they're going up in price is because people are willing to buy at a higher price. You're not buying at a higher price if you think in a day or two the Feds are going to raise or the interest rates will be higher. You're just not doing that. And you're certainly not buying it because you're locking in your gains, because the market today is up, like I think NASDAQ's up 1.25%. S&P 500 is up 75 basis points, 0.75%. This is not indicative of a down market preparation for people saying I'm going to buy bonds to protect my gains. Both things are being bought. So what? So is that? Oh, look at that! Oh my lands, folks! Look at that! Look at that! Lower Tennessee River watershed. Is that where the TVA flooded to get some hydro? Does TVA have hydro? It's got to have hydro, right? TVA's got to. Tennessee Valley Authority, they got to have hydro. Look at that! Fan-diddly-tastic. All right, so anyway, going back to what I was saying. Fed's not indicating raising at all. Inflation numbers come out higher. Unemployment, jobless claims drop. Economic data looks good. And what do people do? They buy stocks, makes sense, and they also buy bonds. That doesn't make sense. So what does that tell you? This is either a temporary boost, all right, or that people are saying short-term money is going to the stock. I don't know. I literally have no idea. It just seems awful odd to me. Doesn't make sense. But of course, I'll tell you right now, my first introduction to the markets when I was a professional was in like this actually when I was still in college. 96? Yeah, I think it was 96, 95, 96. GM said they're going to lay off a bunch of people. I said, oh man, that's not good for stock. And then immediately the stock of GM went way up. I said, that doesn't make any sense. They're going to lay off a bunch of people and the stock goes high? Yep. Okay, that didn't make any sense at all, but that's what happens, because basically the biggest cost of GM, their cost of labor, is the biggest expense. So if they let go a bunch of labor, they don't have the expense unless they can be more profitable, assuming they are able to continue creating the same product. Well, how are they going to do that? You know, they have robots? I don't know. I mean, it wasn't robots. I mean, maybe there were robots. I don't know. But they laid off a bunch of people. You're thinking if they lay off a bunch of people that were producing something, those products won't be produced as much. You think, unless they have some other way to produce those products via robots or something like that. I don't know. But either way, you're saying, or they're going to just drive more and more people to the ground by increasing the demands on their labor. Be it as it may, GM stock went way high when they announced they're going to lay off a bunch of people. I say that doesn't make any sense. It didn't make sense. And that's the point about investing. It doesn't have to make sense. It just doesn't. However, when I'm sitting here today, I'm saying, man, when I see these numbers, I say, yeah, this is all smoke and mirrors. You know, I'm not, who knows who's creating it, but I'll just got to tell you, it's like, look, I'll take my gains while I can. I'm not investing in bonds. But man alive, dudes, this just tells me that why would people be buying up bonds if the markets are tearing it up? That does not make sense. There's a guy from Illinois moving down here to Tennessee. And he's smart, smarty pants. Or move to Georgia, maybe. Anyway, point being, just be prepared. Just be prepared. The good times don't last, and at some point, the bad times will come. So make sure you got your years of store some of your years of feast to prepare for the famine that's coming. I will see you.